Hello folks, in today's video I want to talk about how you can get started investing in the simplest possible way. You can get started investing today with Vanguard Investor here in the UK. If you're the sort of person that wants to get started investing, realizes the value in long-term investing, but doesn't want to think about picking stocks and following news and trying to work out what a growth company is and what a dividend company is and when you're going to get paid and how it's going to go up and when it's going to go up and is the market going to crash, if you don't want to worry about any of that stuff at all, then investing with Vanguard's index funds could just be the thing for you. So in this video I am going to go through some of the options available from Vanguard, and I'm going to put together a sample portfolio that you can maybe use as a basis for ideas to get you started for investing. Hello again folks, David here from prettypenny.club. I make videos to help you reach your financial goals with videos on investing, passive income, frugal living, generally making your money work harder for you. Subscribe if that sounds good to you. Alright folks, so maybe you have discovered this video because investing is something you know you want to get started in, but picking stocks and tracking news and following all these different companies and trying to decide when to buy, when to sell, all that seems to be a bit of a headache. Well, in this video I'm going to talk about index funds, as I say, which will hopefully take away 99% of those pains for investors looking to get started. But also there is that nice bonus that index trackers and ETFs have actually been found to be a very successful and very simple way to generate long-term wealth. So very quickly before we get into it, if you're not sure what an ETF is, it's an exchange traded fund. So what an ETF is a collection of all these different stocks put into a nice convenient basket and effectively trades as one entity, and in that way you get exposure to all the different companies that are held within that basket. So for example, the FTSE 100 here in the UK is a collection of the 100 biggest companies in the UK. So instead of going out and buying a piece of each of those 100 stocks, you can buy an ETF that tracks the performance of the FTSE 100. And what that really means is that you get exposure to all 100 companies in the FTSE 100, all held within one unit of this ETF. And it's in these units of this ETF that you would invest your money. So why are ETFs such a good idea? Well, it has been shown that over 85% of traders cannot beat the market. So what I mean by that is, let's use the FTSE 100 as an example again. If the FTSE 100 has gone up by 10% in 1 year, 85% of people haven't been able to do better trading with their stocks and shares than that 10%. So for retail investors like you and I, really what chance do we really think we have of beating the market when we don't have access to all the data that the professionals have, all the inside knowledge the professionals have, all those years of experience? So you may take the view that it's more effort and not actually all that realistic to buy and sell individual stocks in an attempt to beat the market. Let's just invest in some ETFs that will track the market and aim to mirror that progress. Because at the end of the day, historically the markets have been shown to return between 8 and 10% year on year, and to be absolutely honest with you, that is a great way to invest. And over a long period of time, if you can sustain an 8 to 10% year on year increase on your capital, along with all that good compounding stuff, you're going to be doing very well. So that's why you might want to invest in ETFs, and in particular some of the ETFs that Vanguard offer. That's what this video is all about. I would like to add that this video is in no way sponsored by Vanguard. It's a product that I use, I like it, I'm prepared to talk about it, and I can answer questions about it. So if you have any, just be sure to drop them in the comments below and I'll be sure to get back to you. Right, enough's enough about ETFs. As I promised, this is a sample portfolio that I'm going to put together, not as the basis for any financial advice. I am not a financial advisor. I'm just a guy on the internet talking about my own experiences and some thoughts that I have, but hopefully you will be able to use this information maybe as a basis to form your own ideas to go and get started with some investing, and in particular with ETFs. I would also like to add that these ETF funds that I'm going to look at are not exclusive to Vanguard. They are readily available, certainly on Trading 212. I did check that out. Probably on Free Trade, probably on all the major sort of platforms that you might be using. So definitely worth a look, and as I say, just some ideas. Let's get into it. Okay, so my sample portfolio is going to be made up of 4 index funds. The first of which is the FTSE Developed World UCITS ETF. So at a very high level, without going into any particular technical analysis on this, what this index fund gives you exposure to is over 2,000 of the world's biggest and mid-sized companies across the globe. And what that really does is gives you access to track the world's prosperity as a whole. So in this instance, you are investing in the world. You're hoping that the world does alright going forwards. So at the time of recording, this will cost you round about £55 per unit, and for your £55 then you get a tiny piece of over 2,000 companies. The Vanguard investor website here, you can see the past performance of this particular ETF has been pretty good. We've been running at 11%, 18.5%, nearly 11%, 1.5% and 10% over the last 5 years. That's a pretty good return, you would have to say. Looking at some of the data around this particular ETF, we can see that the majority of it is exposed to North America. Europe, the Pacific, Middle East, and can make up very small portions of these. So the market allocation is actually 64% United States, 8.4% Japan, 4.3% United Kingdom, and so on and so forth. The main sectors we're invested in then here are technology, consumer discretionary, industrials, all the way down to energy and other. And the biggest holdings we have here, you can see, are all global brands. So we've got Apple, Microsoft, Amazon, Facebook, Google, Johnson & Johnson, and there are 2,174 of them. But certainly suffice to say, we are investing in a lot of big companies right across the world. So you can see the biggest slice of any one company in this ETF is just shy of 4%. That's across 2,000 companies, so you can imagine just a small piece of all these big companies across the globe. It means you're well diversified, and what I mean by that is that if one or two of these companies hit tough times, well then you have another 1,998 companies picking up the slack, and hopefully then it becomes slightly less volatile and your investments are pretty safe over the long term. Given that we have access to the whole world here, we are going to put 35% of our allocation of our portfolio into this one fund. The second ETF we are going to add to our portfolio is the S&P 500 UCITS ETF. So the S&P 500 is an index of the top 500 companies in the USA. So since its inception around about the 1920s, it has returned between 8 and 10% annually. And investing in this particular ETF is going to give us access to the single biggest economy in the world. It's going to give us even further exposure to some of the companies we've already covered in a developed world ETF, such as Google and Amazon and Apple, but again specifically we are targeting the world's biggest economy here in the USA, and as such we are going to add 35% of our funds to this index. Let's have a quick look at that index just to see exactly what you're getting. Look down the S&P 500 UCITS ETF then. Again, it's going to cost around £50 per unit for 505 stocks. The performance you would have to say has been pretty good over the last 5 years. Moving on to the portfolio data. We're obviously invested in America here, but it's the information technology, healthcare, consumer discretionary. The biggest holdings are people like Apple, Microsoft, Amazon, and so on. So they're only 505 this time instead of 2,000, but as I say, very focused on the biggest economy in the world. The third ETF we are going to add is the FTSE Emerging Markets UCITS ETF. As the name of the ETF suggests, this is an ETF investing in emerging markets, particularly in China, but also in places like Taiwan, South Africa, Brazil, those parts of the world that are really beginning to grow at this point in time. The returns on an ETF like this could be particularly explosive, but given that they are not fully developed markets, it's a bit difficult to say exactly what way they'll go and when. From that point of view, we are only going to invest 10% of our portfolio into this particular ETF. Quick look at this emerging markets ETF. We can see it's another one in and around the £50 mark, $46.94 at the time of recording for 1,833 stocks. You can see from its historical performance, we have had very strong years at around 20%, and we've also had years where we have lost a little bit of money or broke even. So it is a much more volatile thing. So looking at the actual allocation for the countries, China obviously features very heavily, Taiwan, India, all the way down to smaller holdings in places like Hungary and Czech Republic. Technology features very highly in these areas. And of course, you have companies like Alibaba, which is huge, Tencent Holdings, big company, Taiwan Semiconductor Manufacturing is a big company, but there's also going to be lots and lots of small companies. And this ETF will be hoping that one or two of those small companies can become very big companies and really boost the growth of this particular ETF. And so finally, we are going to allocate the remaining 20% of our funds to the Global Aggregate Bond UCITS ETF. And at this ETF then, once again, it's a pretty cheap one. It's about half the price of the others. £26 will get you access to 5,545 bonds. In terms of price and performance, this one's really been only going for a short time. You can see it's been returning around the 2.5% mark. In terms of what's actually in this ETF, well, basically when you're looking at bonds, you're looking at a credit rating, and the credit rating represents the likelihood of this bond being fulfilled. So that is to say that you get your money on it. So 40% are AAAs, 15% AAs, 22% A's, and so on and so forth. So the higher the credit rating, the better the bond, or at least that's what you would hope for. And then further down, there is some information as to who issued this particular bond. So you can see over half of them are treasury bonds. So all things being equal, this should be a pretty secure way to invest the last 20% of your portfolio. Bonds are typically considered more secure, stable, at least less volatile investments than stocks and shares. Over a long period of time, you would probably expect to earn more from stocks and shares holdings, but bonds can offer a little bit of solidity to a portfolio such as ours that is already 80% stocks and shares. So there you are, folks. If you are looking to get investing, then hopefully this video has shown you just how easy that can be with ETFs. As I say, this sample portfolio has just used 4 different products available from Vanguard, and you're getting instant diversification with over 2,500 stocks and shares across the globe, over 5,500 different kinds of bonds across the globe, and you're getting all this without the headache of sitting down and working out what's a good company, what's a bad company, when to buy and sell. These products are available cheaply, as I showed you, somewhere around £50 per unit, and you can get started without knowing anything about the stock market whatsoever. Just remember, on this channel we talk about long-term investing, so if you are in it for the long term, and by long term I mean 5 to 10 years, preferably more, then the stock market might be the right kind of investment for you. And with these simple products, it takes away an awful lot of the headache, an awful lot of the scariness of getting started. Folks, thanks for watching today. If this video has brought you any value whatsoever, please hit the like button. It will help the channel tremendously. We are getting closer and closer to 1,000 subscribers. I would love to hit it before the end of the year. Who knows whether we will or not. But don't forget as well, if you're already a subscriber, hit that notification bell as well, and that will let you know every time I upload a new video. Folks, thank you very much for watching, and I'll see you in the next one. Bye.